Hello and welcome to FinDux, the channel where we break down finances and benefits without the jargon, so you can stay informed, protected, and in control. If you're over 60 and have more than £3,000 in savings, whether it's for emergencies, funeral costs, or just peace of mind, please don't skip this video. What I'm about to tell you could save you hundreds, even thousands, in lost benefits. Because right now, something is happening quietly across the UK. Thousands of pensioners are being caught off guard by reassessments from the DWP, and in many cases, all it takes is a small increase in your savings to trigger it. Now, you might be thinking, isn't pension credit only affected if I've got over £10,000? Yes, that's the official line, but the truth is more complicated. It's no longer just about how much you've saved, but about how your finances look to the system. Sudden deposits, multiple accounts, unexplained interest, even a small inheritance or sale of personal items, these things can quietly flag your account for review. Let me give you a real-life example. Margaret, aged 72, from Sheffield, saved just over £3,200 over the course of 2 years. She was careful, putting away a little at a time from her winter fuel payments, Christmas money from her son, and selling a second-hand mobility scooter. Nothing extravagant. But when she reapplied for housing benefit, the council asked her to explain a £2,000 deposit from the previous May. She didn't have a receipt, and why would she? It was a second-hand item. That one question triggered a full benefit reassessment. Her claim is now frozen, and she's left feeling anxious and confused, all for trying to be financially responsible. The key issue here is that the Department for Work and Pensions, DWP, and HMRC are now working more closely than ever. Your bank balances, interest earned, and financial activity are automatically reviewed. If anything doesn't match what you originally declared, even if it's innocent, you can face a full review of your pension credit, housing benefit, council tax support, and more. Even savings below the £10,000 threshold can now be questioned. This isn't just about the amount you've saved, it's about financial behavior. The system looks for patterns, sudden increases, multiple accounts, unexplained deposits, or even an income level that doesn't seem to match your spending. And the worst part? Reviews can be backdated, meaning the DWP could ask you to repay money you already received, even if it was an honest mistake. So, what can you do to protect yourself? First, keep clear records. If you receive gifts, sell anything online, or get help from family, write it down. Keep receipts where possible, even for small amounts. If a deposit ever gets questioned, you want to be able to explain exactly where it came from. Second, tidy up your financial accounts. Having several savings accounts with small amounts spread out might look suspicious to the system, even if you're under the capital limit. Where possible, combine your accounts or keep your savings in a more straightforward format. Third, consider using your savings for exempt expenses. Things like prepaying funeral costs, essential home repairs, or medical equipment can sometimes be excluded from capital assessments. This way, your money is still helping you, without counting against your benefits. Fourth, talk to someone. Reach out to Citizens Advice or your local council benefits office. Ask questions before making any large financial moves. A 10-minute conversation today could save you months of stress later. Why is all this happening now? Well, the government is under growing pressure to reduce spending, and sadly, that often means cutting support to those who don't fight back, the elderly, the vulnerable, and people who don't have access to legal advice or financial representation. These quiet rule changes and data sharing agreements aren't being publicized. But they are being enforced. Let's be honest, £3,000 is not a fortune. For many, it's the only cushion they have. It's what gets them through a boiler repair, an unexpected bill, or even helps with the grandkids now and then. But now, that small amount of security is being treated like a red flag. It's deeply unfair, and it's happening in silence. But there's good news too. By watching this video, you're ahead of the curve. You're informed. You now understand how the system works, and what steps you can take to stay protected. Saving is not wrong, in fact, it's smart. but saving without knowing the rules can lead to trouble. So let's be clear, if you've got over £3,000 in savings, you're not doing anything wrong. You're doing the responsible thing. But you do need to be aware of how that money might be seen by benefit systems, and take action before it becomes a problem. If this video helped you, please share it with a friend or family member. If you've had an experience like Margaret's, leave a comment below. Your story might help someone else. And don't forget to subscribe to FinDucks for more plain English videos about money, pensions, and benefits, made for real people like you. Let's keep each other informed, supported, and protected, because your savings should never be used against you. Thank you for watching, and see you in the next video.